Welcome back. You're watching us here on Chartbusters on CNBC TV 18. Let's shift focus to the primary markets now. Tenneco Clean Air's IPO opens for subscription today. Price band for this 3,600 crore IPO or issue is set closer to 380 to 400 rupees a piece. Arvind Chandrasekaran, who's the whole-time director and CEO of the company, joins us in our studios. Thanks a lot, Arvind, for joining in. Congratulations.
Thanks for having me.
Hitting the street for an IPO. But what's interesting is that it's the part of a US global company, which is a private company, and now you're trying to unlock some value in India, right?
Absolutely.
So what I basically wanted to understand is every time there is an MNC-India relationship, the royalty, how much from India goes to the US, and how is that likely to pan out over the very near future?
So first of all, if I may, first of all, you guys are looking dapper, so congrats for that.
Thank you. That doesn't make a question.
So we're a $17 billion company, right? So we are US-based Tier 1 MNC.
Yeah.
We have 180 plants, 30 countries, serving 100-plus customers with 40 tech centers. So we're a very fairly large, well-known automotive company. If you want one sentence to describe us, we'd say we're an R&D technology company. We have access to 5,000 patents and 7,500 plus trademarks. So this is when you talked about royalty. Think about the advantage. Me sitting in India with my team, we have access to patents from Tenneco US, Europe, and even Tenneco China that we can bring to India and apply it to the local OEM needs. What do the Indian OEMs want, right? They want technology, and they want it to be affordable, right? So this is what we bring to the table, and the 2.5% royalty is fairly middle of the fairway. If you look at any other MNC, right? You look at the list of MNCs that are in India, 2.5% is sort of middle of the fairway.
You know, good to have you in the studio, Arvind, and interesting business as we've spoken in the past as well. Just a quick question. We've got it at 2.5% odd is what the royalty is. The street would appreciate business, but they'll also be a little bit cautious. Is there a possibility this royalty rate goes up, or is it fixed, say, for the next year, year and a half, 2 years or something?
So look, we have a royalty policy. We have an independent board of directors now that we're going from a private to a public company. So everything has to go through the independent board. Having said that, look, see, royalty is the function of how much help we need from the parent company. So one is the access to technology. The other one is, them coming in and spending their resources, doing the, vehicle validation, homologation, whatever needs to happen, right? So as long as the technologies are staggered, which is what we see in the next 3 to 5 years, we find that BS6 is going to go to BS7, CAFE norms are coming in for CO2, we're going to have TREM 4 going to TREM 5, and these are fairly staggered between 27 and 30. So as long as these legislations on the clean air powertrain side and also on the shock absorber side, if the evolution of the product roadmap of shock absorbers is happening in a staggered way, which is what we are seeing now, and that 2.5% will probably stay.
And a large part of, in fact, the entire IPO is an offer for sale. It is no funds coming into the company. So for the company's own growth, what's the kind of fund that is required, and will your internal accruals be enough for the same?
Okay, very good question. So first of all, we're a zero-debt company. Okay, apart from the excellent financials we have, we're a zero-debt company. The cash generation is pretty high. We're generating enough cash to fund our capex and our working capital as well. So I think we're very comfortable. The OFS basically is a ticket to enter into capital markets. It gives us the optionality, if we want, to enter into capital markets if we want to grow organically faster or through inorganic means. Plus, it gives the brand visibility for Tenneco. Tenneco is funny because our brands like Monroe Suspension and Champion Spark Plugs are even better known than the Tenneco name itself. So it gives us brand visibility. It gives us access to talent. So think of it as a ticket into the door for explosive growth.
And a ticket which is fairly profitable for the US partners because, $17 billion revenue, you account for just about 5% of their overall revenue.
Absolutely.
But in terms of valuation, given the sort of Indian multiples that we get, it would obviously be fairly value accretive for the American business as well.
India, we are all sitting on this India rocket ship, right? India Inc. is a fantastic story, and Tenneco is, of course, on top of it. And even for Tenneco, right? Tenneco, the company, the parent, India is one of the fastest growing mega regions and also one of the most profitable regions. So obviously all of that money is coming in, the interest coming in. Our CEO, Jim Voss, spends a lot of his time in India as well, trying to make sure that we are set up. So we have a good platform, as you've seen from our financials, right? 18.6% EBITDA, PAT of 12.6%, ROC of 57%.
Yeah.
That is an amazing number. So we have that platform to exploit the tailwinds going
You know,
on
the
in the
parent
future.
would have said, we've set up a good business, we like the return ratios, let's take some money off the table. You know, that seems to be at play. But let's understand more about business. You know, you have two verticals, if I look at it, clean air and powertrain, and the other one is the advanced ride technologies. And I'm seeing the advanced ride technologies, you know, suddenly occupying a larger chunk of the total revenues. It's currently at around 42 and 58%, you know, or thereabouts. How do you see this revenue split moving going ahead? And between the two, which one is more profitable?
So right now, again, we have a very long sales cycle. So we are in a business where just to get a new technology validated and homologated takes 2.5, 3 years. So you have to really zoom out or take a 5-year window. So the next 5 years, we don't think that ratio is going to change much because
50% a piece, approximately?
Sort of. We're not seeing that much change. I think what is interesting is that the premiumization of shock absorber technology is happening at a very accelerated rate. On the legislation side, which is our clean air powertrain business, that is happening like a heartbeat, right? So every time there's an emissions legislation, we get a bump in content, and then so it goes like that. But the shock absorber disruption that's happening is going to be very rapid depending on the adoption rate.
So suffice to say that currently the clean air business is slightly more margin accretive, but shock absorber, because of premiumization, would get closer to that.
Again, look, we have passenger vehicles, we have commercial trucks, we have off-highway industrial. So so I can't give you a weighted average answer, but yeah, you could say that slightly more on the CAPT side and a little bit less on the ride technology.
And your revenue mix across passenger vehicles, commercial vehicles, and all of that will stay the same? 2/3 passenger vehicle, a quarter commercial vehicles, and the others?
Again, because of long sales cycles, for now, yes, that ratio will.
And very quickly, before we let you go, what's the utilization levels you're functioning at? Last year, you did ballpark 5,000 crores. So what would that mean in terms of utilization levels?
So we are at a very high capacity utilization, 80% plus, and that's because, again, that's another differentiator beyond the R&D and technology side. We have a very unique method of product and process design that includes standardization and modularization that allows us to run a lot of these standard parts at very high capacity utilization. So I think if we keep that gross block as is, we probably get another 10-12% top line.
Appreciate you coming down, Arvind. Wishing you and the team all the very best. On listing, we'll push you a little bit more for some quantitative numbers, but it's a great business. Taking some money off the table, the parent's a lucky person, I think so. Yeah.
Thank you.
Thanks.
You guys looking dapper.
All right. Look forward to chatting up with you again. Take that break, come back. We continue our focus on markets. Don't go anywhere.